Banks, as intermediaries, facilitate the allocation of capital by channeling funds from those who have excess savings to those who need financing. This process helps to fuel economic growth by enabling investment in productive assets and allowing businesses and individuals to fund their projects and consumption needs. The banking industry has evolved significantly over the years, with new technologies and regulatory reforms shaping its development. Modern banks offer a range of products and services, from basic savings and checking accounts to complex investment and advisory services. Banks also provide financing solutions, such as loans, mortgages, and credit cards, to businesses and individuals. One of the critical functions of banks is the provision of credit. Banks use the deposits they receive from customers to make loans to borrowers, generating interest income in the process. The interest rate charged on loans depends on various factors, including the borrower's creditworthiness, the duration of the loan, and prevailing market rates. Banks also offer lines of credit, which provide borrowers with a pre-approved amount of funds that can be accessed as needed. Credit cards, another form of credit, allow customers to make purchases using borrowed funds that are repaid with interest. Apart from lending, banks provide deposit services, which allow customers to store their money and earn interest. Banks offer a range of deposit products, from simple savings accounts to time deposits, which are fixed-term deposits that earn higher interest rates. Checking accounts, on the other hand, enable customers to make transactions and pay bills using their deposited funds. Banks also provide electronic payment services, such as wire transfers, automated clearinghouse, ACH, transfers, and mobile payments, which facilitate the transfer of funds between accounts. Investment banking is another critical function of banks. Investment banks provide advisory services to corporations, governments, and other institutions regarding mergers and acquisitions, capital raising, and restructuring. Investment banks also engage in trading and underwriting securities, facilitating the issuance of new securities in financial markets. Regulation is a critical aspect of the banking industry, as banks play a crucial role in the financial system and economy. Governments and regulatory bodies impose rules and standards to ensure that banks operate in a safe and sound manner, protecting the interests of depositors and the stability of the financial system. Regulatory requirements include capital adequacy standards, liquidity requirements, and risk management guidelines. Banks also comply with anti-money laundering, AML, and Know Your Customer, KYC, regulations, which help prevent financial crimes and illicit activities. Banks face various risks, including credit risk, market risk, and operational risk. Credit risk arises when borrowers fail to repay their loans, resulting in losses for the bank. Market risk arises from fluctuations in financial markets, such as interest rates, currency exchange rates, and commodity prices. Operational risk arises from internal factors, such as human errors, system failures, and fraud. Banks manage these risks through various mechanisms, including risk assessment, diversification, hedging, and insurance. The banking industry is constantly evolving, with new technologies and innovations transforming the way banks operate and serve customers. Fintech companies, for instance, use technology to provide financial services and products that are more convenient, accessible, and cost-effective than traditional banking services. These companies leverage digital platforms, data analytics, and artificial intelligence to offer personalized solutions, such as robo-advisors, peer-to-peer lending, and mobile banking. In conclusion, the banking industry plays a vital role in the global economy, providing financial intermediation, credit provision, investment banking, and other services that support economic growth and development. Banks operate in a highly regulated environment, facing various risks and challenges. However, technological advancements and innovation offer opportunities for banks to improve their services and better serve their customers.